Welcome everybody, and I'm going to start looking at the dollar. So, a major pullback in the markets, and so we just need to work out what is next. I'll tell you what's unusual about this one is normally you get, if the markets get spooked, you see quite a hard push up in the dollar. So to see the dollar down here and gold down, every crash is different, and this one is definitely different so far. Um, so we need to plenty of time to get involved in this. We just need to map this out and then move forward. So we got gold. I actually bought gold today at the lows because that's right into the July 26th support. And we are about 30, no, we're more. We are over $40 above the low today in the gold. So if we hold here, uh, try and bid at 23.85 or try and put an order in for 23.85. Gonna have to have a stop, ideally underneath that 64, underneath that 60. Because if that holds here, we could come and if we come and find that trend line high again, we could break it and find 23, 40, 50 or more, or ultimately 2600. So I'm a buyer of the gold here. Let's put the averages on. Let's put the 20 on. So you can see we need ultimately this week, in the next couple of days, we need to close above that 24.10. If we do that, then we can push up. Data-wise, we're pretty quiet. We've got a bond auction a couple of hours before, 3 hours before the US closes on Wednesday. Otherwise, we are fairly quiet. Now we've got Fed, Bank of England, and jobs behind us. No inflation, nothing really critical. So fairly quiet week. Let's have a look at the Nasdaq because the Nasdaq kicked this off. So on this daily chart, the Nasdaq had a sell signal on the 11th of July, pushed back into that, into the trendline resistance on the 15th of July. Another sell, pulled back in the 23rd of July, another sell. Look how we came up into that 20-day average and then saw another leg down. So we've basically got, I would count that as a 1, 2, and a 3. We've not landed at that 16,970 yet. However, if we, I think, well, I think this will still get sold into. We're somewhat adrift of the 20-day average now, having had this plunge. So if we get a higher close here, then these lows down here are potentially viable short term, only for a move back into resistance. So I think we could come all the way back up to 19, 19 and a half before the next leg down, assuming this is going to, assuming this is a significant way to the downside. I think long term, let's look into the autumn. I mean, if the markets stay down here, then we are, bear with me 1 second. If the markets stay down here and eke their way up into the autumn, then I think the big major problem is going to be just this area here. So if we bounce back into that resistance on the Nasdaq with a rate reduction, then I think this could really leg down to 15 or under. So at the moment, this is a three-wave correction, assuming we can bounce here and get some sort of upside here. Don't put your money on that all the time we're under the 20-day average. We could easily come down lower and continue this breakdown. But if we get any upside and start closing above 18 and a half and push back into that resistance, we're pushing back into 17th of July. That's when I think the floodgates could really open. So if a three-way correction, then we get a potential, let's do this, five-way move back into that upside. This is a fairly bullish scenario. We get a five-way correction into that resistance and then fail. Then I would suggest, so we might even get an A, B, C. Then I would suggest we would start, let's say we end up down there. I think we can then get a really significant five wave back down to that 15. So that is, I'm going to do a screenshot of that because I think that is my potential plan for the coming weeks and months. Whoops. Let's take a screenshot of that. Right, moving on. I'm going to leave that there to see if that plays out. In terms of the Dow, now I have been buying lows in the Dow today because my intraday signals were bullish. Well, they weren't bullish. They showed a huge amount of support. You can see all the support down here in June. So it took all that time to climb up. We took 3 or 4 months to climb up, and then 3 days to drop back into the June levels. That's absolutely typical of the markets. Markets come down, well, I was going to say 3 times faster than they go up. But in this case, they have come down a lot faster. Okay, so huge amount of support down there in the Dow. Any attempt to get back to 40 or 40, 50, 40,500, then I think that could start the next move down. Now, if we do get a rate drop in September, believe it or not, rate drops are often followed by market drops. So stick to the technicals. Don't assume for a minute that because the Fed may drop rates, that's going to start a new upcycle. I'm going to be proved wrong if we break 41,500 during the course of the next coming weeks, possibly months. Okay, so a quick look at the euro. So dollar weakness is euro strength. I tell you what, I would look to short the euro if we get up to that 11, get up to the 24 highs. Pound. Yeah, so pounds come right into the support. So it's the euro that's benefiting from that weak dollar, not the pound. I tell you what, if we come down to this 12650 and hold, that is going to be, so in other words, a double bottom from this 2nd of July push. If we come back into that July support and hold, then I think this pound could really power up, possibly as high as the 132. Bear with me 1 minute. Sorry, my cat crept into the office, so I just had to get the cat out. Right. So again, all the time, if this pound continues to close lower, then falls out of this pattern, that is very, very bearish. But if we come back to the bottom of this channel and into that support and hold, then I think the pound get back to the highs and possibly break higher. Pound yen, and then we'll move on. Now, one of the main or the fundamental reason for this is in the same week the pound, the Bank of England dropped rates, Bank of Japan increased rates. So that accelerated this fall. But here on the Tuesday 23rd, we saw that break underneath the channel. And ever since we saw this hold here, this did look bullish here, I have to admit. Bear in mind how bullish the pound yen has been this week. But we hesitated on Monday the 29th, closed lower on Tuesday the 30th. And then that's what triggered this break of this little area of support here. So that 197.66 was support in 4th of June, became resistance particularly after that week close on Tuesday the 30th. What I think is going to happen, so we completely reversed the 24 move. We're almost back to the 24 lows. So I think if we see a push back into 189 and close lower, then that could be the trigger to come for that to come and find 167 and lower. If we do come back to the 24 lows and hold and turn around on volume, then this could flip in a bit. But that's a horrendous, huge, rapid, aggressive repatriation of the yen, which happens when the appetite for risk is off, as well as that fundamental rate situation. Right. Let's start looking at look at commodities. That weak dollar could be what I'm looking for on these commodities. So I've got a potential double bottom on the wheat. If we close above it's still not confirmed. If we close above this $5.60, I think that we could go and challenge those highs again. Otherwise, so we had a good close last week. In fact, let's look at the weekly. We had a higher close last week. Now, it wasn't a buy signal, a weekly buy signal, because it wasn't able to close above that 5.5. But if we subsequently close above that and stay above this channel, it's a bit like the way in which the pound yen dropped out of a funnel pattern like this. If the wheat pushes up in a funnel pattern like this and close above 5.60 and of course $6, I can see us getting to $8, possibly $10 in the wheat. In the meantime, sugar. Right, sugar's had 3-4 weeks of lower closes. But it's come right back into this trend line low and right back into this February 23 area. So bull flag, yes, if we can close above $12, well, we're 11.42 at the moment, then that bodes very well. Right, I haven't looked at the FTSE. Sorry, let me backtrack to the FTSE a moment. Um, so there's the sell signal, or so a lower close in the weekly chart, and the FTSE has come right back down to some key level support. Um, I would keep. Let's go back to the daily. We've come down on significant volume. So if we close above 81, 82, push higher, but any retracement into 82 and a half. I think the main thing to watch out for is any retracement into the into this resistance area. Um, so I think if we break this low, we're going to come and find the April lows here. So do not, I would suggest you do not start looking to buy that at the moment. Right, stocks. Let's look at Tullow. That's a significant close. So we started to hesitate um, after I recommended it. We saw 33, and ever since we saw that 33, we had lower highs. That's not true. 12th of July, we perked up, immediately closed lower, perked up on the 22nd of July, immediately closed lower. So it was written all in this daily chart. Every time we close higher, it's followed by lower closes. A couple of days higher, lower close, higher, lower, higher, several days lower, one higher, several days lower. So turn around and close above 28 and of course 30, and this could really pick up. In the meantime, steer clear. Now, it's broken a key level support today after a lot of weakness recently anyway. Capita, I'm out of Capita anyway. I tell you what, this is coming to my buying zone, but I'm going to steer well clear for the moment. I got out at 20, it touched 22, and ever since we touched 22, we got lower highs, and here we are retracing. I think this could come all the way back to 13 and a half. However, if we drop into 15 and close higher, I will be buying more. I'll be buying a half lot. On these penny stocks, I don't go all in, all out. I go half size and sell at resistance and buy back at support. All right, so BT. BT, so we knocked into 145 and immediately closed lower on the 25th of June. And now we're falling back, broken the 135, and we look as if we can pull back much further at this rate. Maybe this is the point in which we could come all the way back to 115, 120. Okay. Prudential. I was look this chart could not close above the 20-day average. We had a very handsome volume on the last Monday. I bought at 690, and here we are. We've just recently touched, well, we've nearly touched six pounds. So it broke key support. It's coming to touch that extension. Could easily come down here to £5 at this rate. That's come down on volume. If we turn around and close above 650 on volume, I'll get back in. Otherwise, I think this could come lower. So I was looking for this to hold 690, close above £7 and push up. But on the Thursday the 1st, we closed lower after I got in. And we've really lost our footing on this. All right, so that has not worked. Let me, other stocks. What would you like me to look at? Anything? So we've got deep pullback in Pfizer, legal and general, deep pullback. That's come right back to November 23. That's very interesting. I would not see this. It really struggled up there at 230 mark. Closed lower on the first and then just gave way. We are, however, coming back into support zones. I would think that might come to £2, maybe even lower. At which point, if markets hold, I will consider getting in. Let's look at the miners. So, in a year like the one we're in, the kind of volatility we've got at the moment, I'm just looking for shorter targets. So this one's gone all the way up to 30, and currently seen 27 today. What would I do with this one? It's been on it's a decent run. I mean, it's actually held up. So we closed at just under 29 into the close, that's pretty good going. So it may be that this has still got legs. Sent them in. Um, Usual story, pulled right back in, went up into resistance and pulled right back. So it's time to be very cautious here. Let's look at some more commodity related stocks. Let's, commodity. Let's have a look. Let's have a wider look at the commodity scene. That's orange juice coming off. Natural gas. And this is very, very interesting. This is a real potential buying opportunity here. So back in March, yeah, we saw 17.25. I would give that more time because you might so easily come and see 17.25 here. But it is threatening to hold on this April 24 breakout. And this is the time of year to think about getting into natural gas. If we hold this, I will start to look to getting that. High grade copper. Yeah, so copper was giving us a signal as well that all was not well. Pushed up in early July, started to waver. And here we are back in March lows, looking like we might want to come and find February lows as well. Okay, anything you want me to look at? Um, look at Intel. Oh, sorry, I missed your Vodafone. Right, Vodafone. Good idea. Let me just flick through this while I'm here. Ooh, BMI has got, if that gap fills and holds, I think that is a good buy. Yeah, so we looked at BT, we didn't look at Vodafone. I know Vodafone's pulled back into support, isn't it? Yeah. I will give it more time because we saw a big breakout at 66. Are you in this? Or are you thinking about getting in? You're in today, okay. Right, so come yeah, that 68 is a quite a critical number. Could come down to 65, 66, but let's get out of that. So if we can, oh, what's going on? Let's clean this chart out. Hang on. Bear with me. Okay, so if we can, as long as we don't close underneath this 65 to 68, we do have a lot of support. We might just come and start find 65 and possibly even lower. It's a you've bought at a good level of support. So if we can turn around and hold 70 this week, we turn around the next couple of days and hold 70, then I think that could potentially go to 80 plus. Um, However, if we close next couple of days, we close on the 68, we could come all the way down to 60, 63. Let's have a look at the weekly. Yeah, this is a decent level. Very beaten up stock, isn't it? Yeah, I mean the weekly is bullish. 15,000 jobs to be cut on Intel. Wow. I'll watch this one with you because if we come out of the summer holding up above 70, then I think we could easily see 88 and potentially more. It's just a question of where we end up in the next couple of days on this one. Right, unless you've got anything else you want me to look at, I will leave it there. So I think natural gas and gold are markets I'm interested in. Whoops. Otherwise, I've just got a lot on my watch list to stalk. I'm going to be tracking what's happening with that NASDAQ and the dollar and see how that goes. Right. Thanks for joining me, guys. And I'll leave it there and I'll update you as we get a couple of another days trading under our belt. All right. Thanks very much and see you again.